everyone? Welcome to Let's Talk Markets. I am your host, Pink, here with my co-host, Dave Lauer. How you doing, Dave?
Pink, I'm hurt.
Are you hurt?
Yeah, I hurt my ankle last week.
My gosh, you're just tripping. You're doing too much. You're trying to juggle all of these.
It was a silly thing. I'm not, it's like you're getting older and you're like, oh, why don't I go play a sport I haven't played in 20 years? That's a good idea. And then 30 seconds in, fastest ankle injury known to man.
Oh, bless your heart. Well, we'll pretend you were wrestling the Wall Street bull or bear, however it may be.
Other than that, doing all right. Yeah.
Good. I'm glad to hear. Well, here's hoping a speedy recovery for you. Thankfully, this is just shoulder up. So from here, you look good. Everything's great.
You can
All right. So things have been getting gritty down here in the trenches the last few weeks. If you've been following along, we the investors kicked some serious butt on our comment letter campaign.
Yeah.
With more than 5,300 comment letters, we demonstrated clear, widespread, and well-informed support among individual investors for the SEC's equity market structure reforms, including Regulation NMS or Reg NMS, Regulation Best Execution, and the Order Competition Rule. Rest assured that you, as a retail investor, have been heard. The SEC is listening to us. We have a seat at the table for the first time, and that is one hell of a start. But someone else is listening to us as well, especially if you're in the Reddit crowd. You know that they've been watching, and they're not going to stop watching anytime soon. Those who oppose us are also receiving our message loud and clear. So, Dave, let's talk about virtue.
Yeah. So, I think that what we have seen, certainly in the comment files, and as I talk to people in the industry, is the industry is very divided, and on one side you have, let's call it, the wholesaler industrial complex, and that is everyone involved in monetizing and productizing retail investors. Those are the discount brokers, the wholesalers, to some extent the exchanges who depend on those firms as well, but mostly really just the discount brokers and the wholesalers. And on the other side, you've got most of the rest of the industry, some of the exchanges, pension plans, institutional asset managers, some retail brokers, and we can talk about that in a bit. But what I think is interesting is that what Virtu is trying to do in an underhanded way is they've circulated this document around Congress. It has no attribution to them. It's not branded. It doesn't say Virtu's document. It's almost trying to be anonymous in a way. But they were circulating this document. We talked about it a bit on previous episodes. And what they're trying to say is there is broad industry consensus against these rules. And I think that
they had us in the first half because there is broad industry consensus, but it's not in their favor.
Yeah. And so, I think if you look at one part of the industry, there's certainly consensus, right? The wholesaler industrial complex has consensus. They love the current system. They think it works great. They don't want you to touch it. Most of the rest of the industry, at the very least, says, we agree with the SEC's goals here. We agree with the problem that they've identified. We might disagree with the specific way they have written the new rule to address that, and we'd like to see changes to that rule. We'd like to see an alternative form of that rule, but we agree overall with the goals here. To me, that is the consensus. And what Virtu did was they took any comment letter that said anything like that. Even if you just said, we think you should make this small change to the way you are, setting tick size constraints in Reg NMS, they would say you're part of the broad industry consensus against the rules.
That's some broad strokes there,
Yeah, it is for sure. And, I think that when you dig into it, and they're hoping, that people won't dig into it. They're counting on Congress just to read, a very high level, not even make it past the first half, the first page of the thing they're circulating. And, that probably has worked really well in the past.
not just on this front. I mean, speaking more broadly, without getting too political, that's, we have to remember that this is how our government largely works here in the United States, that we have a very small population representing any idea that has a lot of lobbyists behind it usually, but they're claiming to speak for everyone. And that's how our legislators work, is off of infographics like this, because that's what they have in front of them. And so that's what the information that they have to go off.
Sure.
So, I mean, that definitely gets taken advantage of by people that may not have the best intentions. So it's just really important to stay proactive in this and remember that something like this would totally go under the radar. We wouldn't even know about it without we, the investors, being right on top of it. So shout out for that, because I mean, it's just really sad how that works, and how our government completely takes that at face value and runs with it. So
no, that's right. And it's not, I love what we're doing. I love that we're, sort of at the forefront of this, but we have support as well. There is support, widespread support for what we're doing in the industry. We have a lot of allies, and, I think that there are power in numbers, and we're hoping that we can kind of marshal those resources in more explicit ways over time. But for now, I think things are going our way. And we're able to point out this hypocrisy, and we're able to point out this disinformation. So let's talk about that.
Yeah, before we get too far into the merits of this claim, which we could probably talk about for 10 podcasts, but I want to quickly define a few terms for those who may be less familiar about the difference between misinformation and disinformation.
Yeah. So, not just apropos to nothing, just we thought randomly people might be interested in understanding the difference. Misinformation, which happens all the time, it's something that is accidental, right? You inadvertently make a mistake and spread some misinformation. You told all your friends Walmart had great deals on electronics this weekend, but it was actually last weekend.
Yeah.
That happens, right? Now, that's misinformation. Disinformation is different. Let's say you told all your friends you could get them a great deal on electronics at Walmart, and then you collected a bunch of money from them, spent all of it buying tacos and Fabergé eggs for yourself, and disappeared into the wilds of Appalachia with your out-of-office message switched permanently on.
Are you watching me personally? But really, that's important to note, especially if you are, dealing in the online communities and everything. This is a battle that's been going on, the battle of disinformation and some misinformation from not having a good source for data. And I'm going to sound like a total commercial here, but like what we're working on and what we're building at Irvin really addresses a lot of these issues that come with both misinformation and disinformation. So that's worth noting, that this permeates everywhere.
Yeah. It's purposeful. It's got a goal, right?
Yeah.
If your goal is to get some Fabergé eggs and run off into Appalachia, that's your goal, right? If your goal is to continue to earn economic rents through the productization of retail order flow, and you are spreading false information, that's purposeful, right? That's disinformation.
Or buying a bunch of mayonnaise and going and building the most expensive penthouse or piece of real estate in the United States or something.
You have your goals.
Disingenuous.
We all have goals in life, right? There.
Right.
So Virtu spreading this information, we're going to call it their disinformation graphic. And funny enough, it was spreading around for a while. We called them out on it on Twitter for it, and the next day they published it publicly, and it was on 420.
Do they know that they're handing us like all the meat? Like, do they know their crowd really? On one of our favorite holidays, they just hand us a handful of memes. I love it.
Yeah. Look, maybe there's a good explanation. They were all fucked up, right? They were all, smoking some shit, and they're like, "Hey, let's publish this." 420, man.
This is what all the kids are doing. They're hello, fellow kids.
They're getting high and publishing disinformation. Sure. So
because
but,
it's probably just a bunch of overpaid bros anyway that are doing that in the graphics department. They're,
Well, I gotta say, there's not much graphics in this disinformation graphic. I gotta tell you, this is some low budget shit, man. I couldn't believe it. I was like, what? Someone took a Word doc and turned it into a PDF. They put nothing into it. Honestly, I don't even think they read the comment letters they quoted. They just pulled a couple of sentences that they were like, oh, this one agrees with us.
They did a control find.
Yeah.
They did, yeah.
It was really something. And so, look, we've published something to respond to it. I've got to say, our level of design and professionalism and quality, it makes them look amateur. And so, look, it's not all about what does it look like, but I think it matters. And I think that you need to present a professional front when you're dealing at this level. You're circulating things to Congress, which we did. You're publishing them out, putting them out there in the ether. And so, I think when you look at our document, and I encourage you to, the first thing we did was we pointed out the disinformation, and we said, look, there is industry consensus. Forget the wholesaler industrial complex. If you look at what people said in their comment letters, there is broad support for the Reg NMS changes, and there is, the positions of the industry. The industry supports a half-penny tick size, so do we, the investors. The industry supports a wider tick for less liquid securities, which the SEC didn't propose, so do we, the investors. The industry supports a 10 mil access fee cap. Now, on our side, we said, let's get rid of payment for order flow and rebates, and then you can get rid of the access fee cap. But otherwise, sure, a 10 mil access fee cap. The industry supports, some support harmonization of trading increments. Others say, make it a minimum of 10 mils. We support full harmonization. The industry fully supports the market data changes. So do we. And so, when you look at who is aligned with industry consensus and who are the outliers and the extremists, it's certainly the wholesalers and the retail brokers. They are way out of consensus.
Yeah. And I think that the word extremists is right on.
I think what they try to paint people as, outside of mainstream, when it's really them. It's really their views that are totally outside of mainstream. And I think that is one of the most important things that we tried to highlight with this document. When you look at Reg Best X, there's actually broad support. And a lot of firms suggested some changes. A lot of institutional asset managers said, hey, this regulation focuses too much on price, which makes sense for retail orders, but not for institutional orders. Make some changes there. And if you were an asset manager who said that, Virtu said you believe that the proposal should be withdrawn. That's what they did. That's the tact that they took. And so they had a bunch of logos under this broad consensus, and they were trying to pretend that that logo, every firm, every organization whose logo was there is part of that broad industry consensus. Just to give you one of the most egregious examples, they had the logos of a bunch of pension plans. Now this was weird. Ontario teachers, CalPERS, CalSTRS, and CPP filed a comment letter together. These are four very large, very, very influential pension plans, as did the Council on Institutional Investors, and that's a trade organization for pension plans. And the individual pension plans said, we support the SEC's proposal to reduce tick size, and now applies to most securities to a half penny, blah, 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 blah. Agent brokers trading for customers cannot tailor their order routing based on the speed of trading the way that the fast proprietary trading firms can. So we'd rather you not get down to a 1/10 of a cent or 20th of a cent tick size. So that's all. It was like a 2-page comment letter that basically said, we support Reg NMS, but, do this. Here, we'll give you 3 changes or 2 changes.
The first 2 words were we support.
Yeah. And so all of their logos were on Virtu's doc.
Right.
They didn't even file a comment letter on VestX, order competition, but they're part of the broad industry consensus.
And they were bringing up NASDAQ, IBKR. I mean, things that even when you had barely had time to look at the surface several weeks back of some of these comment letters, you noted that they were pretty much on board with everything that was being proposed with the SEC, maybe with some changes. But I just thought that, I mean, that's pretty ballsy move of them to put these logos there, knowing that they said something completely different. And that takes us back to the disinformation.
Yeah, like Bank of Montreal is a really good example. Bank of Montreal's logo was right there. Here's what Bank of Montreal said in terms of the order competition rule. Retail auctions in conjunction with Rule 605 will allow market forces to determine the use of retail auction facilities without forcing adoption. Providing the space for natural liquidity to interact with minimal intermediation could improve execution outcomes for both retail and institutional investors. Auction models that bring these investors together align with the Reg NMS mandate for the most willing buyer to meet the most willing seller. They were fully supportive of the order competition.
Yeah, that's hard to twist.
Yeah.
I mean, that's pretty straightforward support.
Yeah, Interactive Brokers, it was the same thing. We broadly support the Commission's proposals and its goal of enhancing execution quality, its pursuit of that goal by encouraging order-by-order competition, particularly for segmented orders. By moving retail flow onto the exchanges where a variety of market participants can compete for them, we hope the Commission will succeed in creating opportunities for better price improvement for retail flow. And they're part of the broad industry consensus that says the order competition rule should be withdrawn, according to Virtu.
This should make you angry. I mean, not you personally, Dave. We know that you're always fired up about this stuff. It's great.
Always angry
about it. But as a retail investor, seriously, this can be kind of a little bit high level for some just casual investors, but it's important to know that this is happening. It affects your markets. It affects how you invest in those markets and whether you invest in them fairly. And it's just so important to understand what's happening behind the curtain. And it's egregious. It's offensive. This should not even be happening. But the fact that it's being so brazenly misrepresented, it's almost awe-inspiring how ballsy they are. Like, really, you have to just kind of be like, wow, you guys really just don't care. I mean,
yeah, no, honestly, like, and they don't think that there will be repercussions to this kind of disinformation. They don't think that it will negatively impact the perception of them as they lobby to prevent these kinds of changes. I think it's up to us to make those naive assumptions. It's up to us to make sure that our members of Congress hear from us, that they know that we care about these issues, and that we can quickly point out to them when they're being lied to and when things are being misrepresented, and how firms actually feel. Yeah.
What is it? A lie travels halfway around the world before the truth can even put its shoes on and get out the door, right?
Yeah, exactly.
So,
that's right.
I mean, this stuff travels fast, and we have to keep up with it.
So, there's also our good old friend Robinhood, who we talked about a bit last week. And, look, want to talk about misrepresenting? Virtu quotes Robinhood as saying, with its experimental so-called order competition rule, the SEC would, for retail investors only, revert to the exchange oligopolies that Congress directed it to abolish 50 years ago.
Those are some words.
Yeah, Virtu accurately represented Robinhood. Yeah, they're totally
we can't say that's far off the mark there, but
no. Did you expect something different? Of course. This is the firm the SEC fined $65 million for misleading investors about payment for order flow. And Reuters reported that Robinhood said that there was a trade-off. Certain wholesalers told Robinhood there was a trade-off between payment for order flow and price improvement. And Robinhood explicitly offered less price improvement for its customers in exchange for receiving higher payment for order flow. That's called stealing from your customers.
In Texas, we call that stealing.
Exactly.
To quote with Wes Christian.
Exactly.
There's no two ways about it. I mean, it's insane to me that more people aren't upset that $65 million is just a drop in the bucket for them. That speaks volumes to how profitable payment for order flow is. And I mean, that's just the cost of doing business. It's just a line item in their budget every year.
And it speaks to what has become a two-tiered system of justice. I mean, this is an issue across the board in the US, but certainly in finance, a fine is basically allowing certain behavior to occur that shouldn't be happening as long as you can pay the regulators. And, that means that if you can't pay, then you can't do it. And if you can pay, you can. That is not justice. That is not supposed to be how the American system works. I mean, yeah, this is naive. We all know it is. But, it doesn't mean that we shouldn't be outraged every single time we see yet another example of the wealthy enjoying a completely different standard of law and justice than everyone else.
There's two Americas. Like a lot of people say, there's two worlds. There's those of us in the lower and middle class, so to speak, and then those in the 1%. And I mean, even those in the upper class here, a parking ticket is nothing to them, whereas a lower class person may go to jail for a week or a month because they can't pay that. Yeah. That's not justice. That's justice. That's perverted justice.
It is. It's awful. So, that's the story on Virtu and this document, and what our response has been. And again, I encourage everyone, take a look at what we put out there. We're quite proud of that document. We're quite proud of showing what the actual consensus is. And look, we're going to be organizing some things around Congress soon, but if you feel like it, call your member of Congress. Let them know you care about these issues. You support the SEC. You support the industry consensus, and you don't want Virtu and Citadel and the discount brokers who productize your order flow to be seen as being in the position of speaking for you and advocating for you.
Absolutely.
And they're in fact only doing that for their bottom line, their annual bonuses, and their earnings per share.
Absolutely. I'm speaking directly to my millennial family, okay? Gen Xers, whoever you are listening, I'm telling you, you have every contact saved in your phone. You've got your booty call from 4 years ago. Please save your legislators' numbers and keep in contact with them, okay? Save their phone numbers, save their emails, and let them know what you think about this. It starts with you. It starts on a local level. So, I mean, staying involved and letting them know, hey, this pisses me off. That's not what, that's not only not how I feel. Look at this from We the Investors. I mean, this is what's going on. So super important to speak out against that. And we strongly encourage anyone who's been misrepresented by this disinfographic, whether you are a retail investor or a company, a broker, or anyone, come forward and make a statement. We stand with We the Investors. We stand with the SEC's proposals. Here's what we actually said. Clear the record. I mean, there's Fidelity's logo was up there on their disinfographic. And I wanted to just kind of touch on that. I wanted to see, because Fidelity quickly became sort of it was the go-to after the Robinhood fiasco of January 2021. And it was mainly because they are one of the only main brokerages that does not accept payment for order flow. So I wanted to kind of touch on that.
Yeah, in equities, they do accept payment for order flow and options, but they don't accept payment for order flow and equities. They're one of few brokers. And again, Fidelity said, we understand the SEC's rationale for the proposal. As an institutional investor, we have limited opportunities to interact with retail order flow. We support finding ways for institutional investors to have better access to retail flow in a way that's beneficial to both constituents. And if a qualified auction might improve prices for retail in the process, it could drive better outcomes for end investors. This is not a firm that is saying, withdraw this proposal. This is a firm that is saying, we think your goals are reasonable. We think you've identified a problem. Let's try and figure out together the best way to solve it, right? That's a very different statement than what Virtu is making, right? And again, I think that it's so important to make sure people understand that when Virtu communicates this, when Citadel is lobbying, when Robinhood is lobbying in Congress, they are saying, we represent retail investors. They're saying in this document that 300 million investors and firms that manage almost $30 trillion of assets form this industry consensus, right? Do you feel like you're represented by these firms?
Not at all. I mean, again, I'm offended on behalf of everyone.
These firms, they claim to represent you. They claim that there's consensus of the firms that do represent you, but you are a product, nothing more than a product. You're represented by them like Happy Meals are represented by McDonald's, all right? We're all McNuggets to them. Delivered in flash frozen, prepackaged, vacuum sealed shipping pallets, fried in hog lard, resold for dollars on the... Sorry, I have no idea what I'm talking about. I don't know how McNuggets are made.
But it sounds close enough. I mean, it's exactly the lack of transparency that defines our market, right?
Yeah, that's right. And,
so if they really truly represented 300 million investors on the strength of 2 comment letters, they would have no problem shining a great big light on current best execution practices.
Yeah, that's right. So I think look, we've hammered it, and I think we gave you hopefully something to think about, something to do. If you want to call Congress, we're actively pushing the right information out there. And we're going to actively keep trying to bring this all to light and make sure that nothing, can kind of slip under the radar.
Absolutely.
Yeah. So,
and I mean, included in that, we kind of touched on it earlier, the SEC waiver that's been going around, and I definitely want to get into that more next week.
So next week, look, we talked last week about what can a broker do to get put out, to have their license revoked? Doesn't seem like there's hardly anything that they can do. I was talking about it on Twitter today with some folks. So, there's this other entire process that we haven't hardly touched upon, the SEC waiver process, that I think people don't really know about and should know about. So, I think that's something that we can talk about next week. And, other than that, folks, let us know, what you're thinking about, what you're interested in. Make sure to, give us a rating if you think we deserve it. Subscribe to the podcast, and, give us some feedback. Let us know what you think.
Absolutely. And we'll have a blog up very soon that has some reading material, some literature to go along with each one of these episodes. But I'm really excited for where we're headed with this. We've covered a lot of ground in just a couple of weeks. And we just need to keep driving home the point that it's important to stay active, important to stay involved, and that we need to let everyone know that we're not satisfied with this just being the cost of them doing business, that there needs to be real, something real happening, that their bottom line is, unless they're going out of business, they're going to continue to do what they're doing.
These fines are just
so someone has to enforce somewhere. And
we need actual deterrence from regulators and from enforcement authorities. And, we'll keep pushing for that, and we'll keep making sure that we keep these issues front and center. We figure there's going to be more disinformation as this goes along. This is, we're at like step 2 of 10, I'm sure. Right. And this is a multi-year battle. So, we're going to do our best to keep shining a light on all of it.
So that's why it's really important for you to stay involved with We the Investors, stay involved with your local legislators, stay in contact with your congressman, let them know what you think about all of this. And We the Investors will continue to meet their disinformation with verifiable fact. So that's what we do, and we'll continue this fight. We appreciate you tuning in today, and we will see you next week.
Yeah, thanks, everyone.